Without further ado, Hunt, this is your show, sir. So take us away, my man.
Awesome. Yeah. So we just want to say thank you, PJ, for having me on here. We've been talking about this for a little while on, why this is an important topic. It's something that, kind of what you alluded to, people don't want to get into, right? I don't want to get into the numbers. I want to run my business. I want to run my shop. I don't want to get into accounting. That's not what I do. But one of the most important things, and one of the things that we see all the time, when we start working with a shop, is that they have two sets of books, right? In the past, people are used to having two sets of books, right? There's one that you reported to the government, and then the other one which you really made. But what we see now is a lot of people live and die by their shop management software, right? Tekmetric is what you guys are using on a daily basis. Tekmetric is what your service advisor, what your general managers are using. And a lot of times that's what you're paying people off of, incentivizing people off of. And they look at that and they say, hey, that's right. It's perfect. It's always dead accurate. We like to think that, right? And for a lot of people, it is. It is completely accurate. And it's an accurate perspective of what's going on in their business, but we need to verify that, right? And so we can't ignore the QuickBooks, right? We can't ignore our accounting software, because at the end of the day, Tekmetric or any other shop management software out there is what we think we're making, right? It's what we charge the customers, what we think our margins are. It's what we think we paid for parts, it's what we think we paid for our employees. QuickBooks is what we actually took in. It's what we actually paid out. Right, wrong, or indifferent, there is useful information in both of those, and we need to make sure that we can understand why those do match or why they don't match. Probably the number one thing that we see that almost never matches, and this is not a slam on Tekmetric or any shop management software, it's just very tricky to do, is your labor gross profit margin. Depending on how you pay your technicians, it might be very close, it might not be close at all. PJ could probably get into all the inner workings on how they calculate, labor cost in there, but essentially you put an hourly rate in there for your employees. It knows how much you're selling. It knows how many hours the person was there, and it tries to calculate it. However, it ignores a lot of things, right? It doesn't always factor in vacation. It doesn't always factor in benefits. It obviously isn't going to factor in payroll taxes. And so more times than not, when we see the labor gross profit margin on Tekmetric, almost always higher than what we're actually realizing in real life. I know, dealing with as many shops as I do, is if I look at someone's labor gross profit margin, I say, hey, PJ, you're making 90% labor gross profit. That is not me saying, PJ, you're doing a good job. That's saying, hey, PJ, we got to look into something because this just isn't right. It's almost physically impossible to do that. And so for the labor gross profit side, there's a number of things that you can do. Depending on what your paying plan and what your comp plans are, though, it's probably not going to ever be possible to get it 100%. It's never going to be, $15,303 in both systems. But what we need to do is we need to make sure that we're talking the same language. If it's 15,300 in Tekmetric, 15,500, 15,000, 15,100 in QuickBooks, we're in a ballpark. We have the right idea here. What we usually end up doing here to kind of, mirror the two systems to try to make sure that these are working effectively is usually just pretty simple. If I go in there and I see that my labor cost in Tekmetric is underreported by, let's say, 20%, it's 20% less than what QuickBooks is showing on, quarterly or maybe a semi-annual basis. We want to have a decent amount of time here for a good average. All I'm going to do is I'm going to go in and I'm going to increase my technician's hourly rate. Extremely simple, right? Takes a couple clicks. If I got PJ in there with my technician, I'm 20% short on my, margins. Instead of being there for $20 an hour, I'm going to change this rate to now $24 an hour. And then I'm going to kind of see it. I'm going to kind of look at that trend to see over a couple months if that comes back into line. Like I said, it's never going to be perfect, right? It's going to be a little bit high, a little bit low. But over the course of the year, if I'm comparing a 4-month period, I'm showing 66% labor gross profit in Tekmetric, 65, 67% in QuickBooks. We've achieved it. Right? And so sometimes it's not actually the absolute amount, it's getting into behind it, figuring out why we can understand this and figuring out if we can kind of figure out where that discrepancy is going.
So I've got a question on that. And you're right. I have advised a lot of my clients to do pretty much I call it a loaded cost, right?
Exactly.
Let's upload a loaded cost in for our technician, because if you tell me that you're making 75, 85, 90%, 70, 75 maybe falling in line, 85, 90%, like you said, that's red flags all day long. And so what I've tried to tell them is to put in a loaded cost, but everybody's is different, right? And so I tell people, labor, your gross profit on labor is essentially your gross profit of cost of goods sold. And the cost of that good is that labor cost. But everybody's got to do it a little bit differently, and everybody's got one thing we've learned in the independent space is that there's 1,000 different pay plans, right? You talk to 1,000 shops, there's 1,000 different pay plans. And so you can't build a software that does all that. And I tell them your source of truth is always your accounting software, because that's where you cut your checks out of. That's where you pay your taxes out of. That's where all of that overhead is. So as a rule of thumb, Hunt, do you have anything to where if a tech costs you $20 an hour, should they add 25%, 30%? What's that rule of thumb for them?
Usually if I don't have any information to go off of, if I say add 25% to it, we're usually going to get pretty close there. Okay. And a big thing, like you said, is, we got to keep in mind here that this doesn't need to be overcomplicated, right? It's only as complicated as you want to make it. And I had a client, ask me about this the other day, but he said, hey, Hunt, I pay my service advisor off of gross profit, right? And so I give him whatever it is, 3% of gross profit. So I want that to be exactly right. And I showed him how little of an effect this really makes. I said, when you boil this down, the difference between what Tekmetric was showing and what Quickbooks was showing, that's going to be a difference of $10 in the person's commissions. Do you really care? Does he really care? Right? Like, let's not kill ourselves over this, because it's just not, the labor we put into it is not worth the end result. Yeah, you'd spend a lot more of your time, especially a shop owner's time, is some of the most valuable in the shop. And how long are you spending chasing $10? Let's go ahead and let's give them the $10 if that's what we're sitting here talking about. So, that's always difficult to get people past. So I will tell you. So I had Jeff Byrne here. He had asked a question, and Hunt, this may make a little more sense to you, but he was saying just as as Tekmetric is, let's see, he said he would like to be able to see more general ledger accounts in Tekmetric. And so he said that, I guess with one ledger, he can only show receipts for parts in the system instead of supplies, tools, and et cetera. So, obviously we haven't built Tekmetric to be an accounting system, but maybe you can speak to this and maybe some tricks and tools of the trade that can help him. And so, this is one of the things, and I'm curious of where Jeff is coming from. I can probably guess which systems he's coming from if he's missing that aspect of his shop management software. But, what we always tell people is utilize the software, utilize the services for what they do best, right? And so what I always say is use your shop management software to do that, right? Customer facing, building tickets, invoicing, the reporting, all of that stuff. That's what they do best. That's what you guys are good at. And the same flip side, QuickBooks is very good at accounting. It's one of the few, products out there. They have almost 100% market share because no one else wants to compete with them. They just have that small business accounting, and they do that very well. But QuickBooks is terrible at invoicing, right? So we're not going to use QuickBooks for invoicing. We're going to use Tekmetric for invoicing. Tekmetric doesn't have accounting, and it's probably doesn't even want to get into that general ledger space. So that's what we're going to use QuickBooks for. If you utilize back office and you utilize stuff like that, you utilize QuickBooks Online to get your bank feed set up, a lot of this stuff is completely seamless. I can kind of see what he's talking about, that he probably relies more heavily on Tekmetric. Unfortunately, you're going to have two systems. You're going to have to be looking at this stuff. It might seem like an annoyance to you, but the end result that you're going to get out of, leveraging these products for what they do best is going to be well worth your time.
Yeah, he had written in here, and this makes a lot more sense for sure. It looks like he probably came from the dealership side, so he was using Reynolds & Reynolds as a DMS, and that's my side of the business too. And of course, it's a turnkey deal where all the general ledger accounts, all of the accounting was done, payroll was done, and that is something quite different. Who knows? Maybe one day Tekmetric will be a DMS as well. But and then Mitchell also. So hey, if we're not as robust as Mitchell just yet, they got a 30-year head start on them. 3 years in? We'll catch them pretty quick. I'm pretty confident. So,
I don't think
that's a good question.
I don't think they would like to pay the same monthly fee as what Reynolds charges either. So.
Oh no, I think they had $50,000 setup fee, and I think it was about $10,000 a month when I last looked into it. And that was almost a decade ago. So yes, absolutely. Let's see. Jerry Frank here's got. Let's see. I've seen some shops at 100% gross profit on labor because they forgot to assign a technician. That was more of an issue when he was with Mitchell, and not sure it can happen with Tekmetric. So technically, Jerry, I can answer that question. Yes, it could happen in Tekmetric if the shop settings are not set up appropriately. So if you see 100% gross profit on that line of a job, it means probably we either one, don't have a cost assigned to a technician, or two, don't have a technician assigned to the job. Either one means you have a $0 cost of that labor that you're selling. So you can set it up to obviously associate those costs. And as Hunt says, and as I tell my clients all the time, put a loaded cost in there. It sounds like about 25% is probably going to cover us. So if we have an employee sitting at $20, then we need to bump that up to about $25 an hour to cover that additional overhead. And of course, it's different per shop. Do you offer benefits? Do you have healthcare? Do you have additional benefits that may have a cost higher than just payroll taxes? So, but yes, sir, 100% profit is a huge red flag for just about any shop owner and or service advisor. So Jeff is being very kind. He said Tekmetric is better than Mitchell, so we're good there. And he said, oh, he was paying $7,500 a month for Reynolds when he was.
He got a good deal on it.
I know. I got quoted 10 grand. Maybe they just saw a sucker coming through the door. So let's see. Tim Schaefer. Tim says if they have a service advisor pay as cost of goods sold in QuickBooks, he said we should add their pay to labor cost in Tekmetric. So it sounds like Tim is baking in a service advisor's cost of goods as well. So if we've got a commission in there for a service advisor, if Tim's paying, I don't know, 10% or 15%, whatever the number is of, I guess, maybe labor sold, Tim is baking in the cost of that service advisor's commission, if you will, into the cost of the technician. So again, lowering that gross profit margin, but to a more realistic number to what you said, Hunt, kind of, we want to get it close to what's coming out of the system.
Yeah, and that's a big thing on it, and at the end of the day, just like there's 1,000 different ways to look at, tech pay plans, I think Tim's trying to get me riled up here to see where we're putting service advisor, because half the people on here probably are like, service advisor is an expense. The other half are saying service advisors are cost of goods sold. What I always tell people is do what makes sense for you, right? The whole reason we're doing this is not for my benefit, right? I look at numbers all day. I can look at it no matter how this is set up. What makes sense to you? What is going to be able to help you understand your numbers, analyze these, set goals, follow these goals, and track this stuff? If that's what makes sense to you, perfect. Set it up that way. Whether that's adding a service advisor in there, whether that's not including a service advisor in there. But, Tim brings up a really good point here. What about people that are not directly, attributable to a job? I got a lot of people out there that have a, shop foreman. The shop foreman is directly tied to that labor. And a lot of times we look at his costs, on the accounting side as a technician. He's never going to be assigned to a job there because he's not specifically on any jobs. So maybe we need to add 30% to all of our technicians or 40% to all of our technicians to kind of factor that in there. Maintenance people, porters, depending on how you treat that. You could really go down a rabbit hole here. But like I said, if it makes sense to you and you understand it, and it's something that you can repeat and do the same time so we can compare this stuff, perfect.
Yeah, Tim and I have talked about this before. Tim is actually a personal client of mine. Met him a couple, 2 or 3 years ago. Tim, correct me if I'm wrong here. I believe Tim actually just started a coaching company as well. I believe it's level 6 coaching. So he was really bored running a shop, that wasn't busy enough. So he's decided to start another business. But Tim said that he puts a lot of those costs in there, but he may get upwards of, showing a gross profit margin of, a pretty thin number. A lot of people are going to say, well, I want to make about 55% parts and labor across this one line item, and Tim, I think, and he can respond to this, but I want to say Tim told me he might be showing 25, 30, 35%, but it's because he's stacked up so many costs. So at the end of the month, he's not getting a surprise. When he looks at his gross profit margins in his shop software, he's going to have a realistic expectation as to where he's going to land also in his accounting. That's kind of nice. That's kind of nice to actually not have that surprise like, oh, I have to pay what? At the end of the month. He's actually managing those expectations. So I'll be interested to see what he says. 50 to 55% is his goal. 50 to 55% is his goal, but that is very close, he's saying, to his real P&L.
Exactly.
So he's doing a markup based off of his real cost. And so that's the other thing. He may not be reducing his gross profit. He's keeping it at that 50 and 55%, but by baking in his real cost. And he's saying that he's normally within 1 to 2% on a monthly basis. Tim, that is awesome. That is very, very good information for everybody here. So Hunt, if we're doing all this, we've got numbers to check. We've got them here in the shop software. We've got them in our accounting software. You're giving some good tips on how to hopefully get those pretty close. Mm-hmm. How often do we reconcile and check these?
So, like Tim says, he's looking at that on a monthly basis, right? You want to kind of do a spot check on it on a monthly basis to make sure that they're speaking the same language. If I'm within a couple points, I'm going to keep on kind of analyzing and moving about with my day. Okay, things are going as planned. A really deep dive, I probably want 3 to 6 months, right? Because we all know how this industry is. It's, feast or famine. You could have a month where you're doing 130, the next month you do 85. Sometimes there's no rhyme or reason to it. But, as much as we try to match the income and the expenses to the proper period, we're going to have bleed over, right? We're going to have deliveries, bulk oil, all kinds of stuff. But, after 6 months, I'm going to take a hard look at that. And that should be really darn close. Like Tim says, 1 to 2 percentage points, it's pretty realistic. Hey, could you look at every single week? Sure, but it's not going to be accurate information. You're going to be panicking yourself for no reason. Again, monthly should be pretty close, but there are certain situations that are going to throw it off. Make sure you're at least looking at once or twice a year to doing a hard reconcile and, making sure that markup is right. Like I think Matt was saying on here, his is 31%, right? So let's maybe look at that after 6 months and make sure we're still at 31%. After 6 months, I might have got a new workers' comp plan. I might have got a new health insurance plan. I might have added 401k. Hey, maybe I'm at 33% now. Maybe I saved some money. I went down. So kind of a good rule of thumb there.
Yeah, for sure. And that's what I was thinking with Matt. And I mean, it depends on where you are, what your taxes are, and like you said, the benefits that we're offering to each and every one of those employees. But it is a good rule of thumb to dig into that. So, what are some of the differences that some of these shops are going to see quite often? Right? What's a red flag that they're going to see, and what's the top 2, top 3 maybe that they're going to be looking out for? The big red flags that they can catch pretty easily.
So the biggest thing that we see, obviously labor. I never even talk about labor because inevitably it's almost always wrong. So usually we're looking at just overall sales and cost of goods sold, right? Hey, you're not matching your sales up correctly because you're just depositing all of your money and that's going to be your sales for the month versus doing it true with, receivables and accounts receivable and making sure that you're matching up your daily sales. Your sales in QuickBooks for the month should be down to the penny from what Tekmetric says, right? If you're using back office, using stuff like that, there's really no reason for it to be, there's really no reason for it to be different. The only time we do see sometimes is if you go back and you change an invoice and you mess with stuff around, but it's one of the things that we look at for our clients to make sure that those match up, right? So right there, we got to make sure that our sales match because that's usually an easy one. If once you get a procedure set up, it shouldn't really be an issue, but very, very common. The next one is probably parts margin, right? I don't know how many times, I talk to clients or talk to shops, especially when we first start working together. And I say, all right, PJ, what's your target for parts margin? Target's 50%, right? 50% is a pretty good, rule of thumb for a general shop. I say, okay, perfect. I said, well, you're making about 30% parts margin. No way. That can't be right. Look, see right here, I'm making 50% and they show me their end of day report, right? There it is. Look. Sold 50,000 of parts, $25,000 cost. There's my margin. We take a look at QuickBooks. Hey, like I said, sales should be dead on, right? I agree with you. We got 50,000 of part sales. We got $35,000 of parts cost. Where's this $10,000 difference coming up? And we need to dive into that. So the biggest thing that I use to figure out why we have a difference in parts margin is obviously in QuickBooks, we can just pull a report for the cost of goods sold for parts. Right? It'll have every single transaction for the first of the month to the end of the month. You can sort that by vendor, you can total that, you can put it in Excel, you can do a ton of stuff. Tekmetric has the same report that you can use to compare. The parts purchase report is going to give us that same exact information. Again, it allows us to sort it by vendors. Makes my life very easy when I have to look at this stuff because if I look in QuickBooks and I see that I spent $7,000 with CarQuest and I pull up Tekmetric and I see that I should have only spent $50 with CarQuest, I got an issue, right? And this is something that that's a real life example of when we started to dive into this stuff. Hey, PJ, why did you spend $7,000 at CarQuest? And you tell me, I don't spend any money at CarQuest. And then the light goes off. You got an ex-employee that's going, using your name, using your account and buying stuff, right? We have smaller issues, which are less subtle than just straight up theft like that. It could be cores, warranties, stuff like that. Think about how much you guys are paying for the cores, for water pumps, batteries, whatever it might be. If you're not getting that money back on the back end from your vendors, there's a lot of your profit margin right there. And so it's another thing where we can go in there, we can start looking at discrepancies, and we can start doing spot checks. At the end of the day, every single part that I paid for, I want to be able to correspondingly match that up with a ticket in Tekmetric that was paid for by a customer. As long as the processes and procedures are in place, there's really no room for any sort of discrepancies. But when you don't have the processes and procedures, when you don't do it the same, and when you aren't comparing these, you probably will never notice a difference. Maybe at the end of the month, you start noticing stuff because you're like, I am so busy, I don't have any money in my bank. I don't know why. But if you're just looking at Tekmetric, then you might not notice anything because everything is looking fine there. But for some reason, we just don't have the money and we got to disconnect. And a lot of times we see that on the part side of things.
So Hunt, I'm going to share my screen real quick. Are you seeing my Tekmetric screen?
I am, yep.
So a couple of the reports that Hunt just referenced for those of you who are current Tekmetric users, a couple of them. One, he referenced the end of day report. This is a fake shop, so don't really pay much attention to the numbers necessarily, but this is one of the reports that he was talking about, which is good. You can run this at the end of day report. You can run it for just about any date range that you want. We just call it the end of day. So he's talking about this one where it's good, but we could see some gross profit margins. Like here, the average repair order profit margin, that could be misrepresented because we don't actually have those costs as high as what we talked about earlier. A parts report, right? So the parts usage and parts purchase report, this is what he's talking about and using for reconciliation to see if parts are kind of growing legs and walking out the back door. Previous employees are using charge accounts and so forth. So parts purchased is what's going to tell you who you purchased parts from, right? So let's say I haven't been using AutoZone in a long time, but here's all my charges. Just in a matter of about 5 seconds while I'm talking about it, I was able to pull up all the charges that we had in a specific time frame. If you wanted to see, well, okay, so we purchased those parts, but where did we use them? Again, jump into the parts usage report. We purchased these parts. Why did we buy them? Why did I just buy 144 of this oil filter that I haven't used any of in the past 6 months? And where did those go? Right. So again, I can jump in here, look at this by vendor. I could look at it by brand. I could check the repair order numbers. I could search for it by part number. There's a lot of detail here. And this report right here was actually, we didn't make a big enough deal out of it actually when I think this feature came out. And when it did, I realized how powerful this was. And it was something that I couldn't even get out of my DMS, at least not very easily back in the day. So these are the reports that Hunt is actually referring to. And Hunt, obviously, if there's anything else you want me to show in the software, just tell me where you want to go, and I'm happy to point those out. But these two, this is an opportunity to reference those two reports that are very, very powerful.
Yeah, those are the two biggest ones that we probably use. I mean, some of the other one, category profit summaries and stuff like that to dive into, we use as well. But end of day reports where everything is going to start, right? That's going to show us our sales. It's going to show us our AR. That's going to show us our deposits. That's going to show us our car count. That's going to show us our margins. All of that stuff is right there. And like you said, the parts report makes our life really easy because the only way in the past that we're able to do this is we had to kind of take a macro view of it and saying, all right, overall, we know we have a discrepancy. And then really the only other way to find it, in the past was we just had to do spot checks. And I used to just tell people, just pull an invoice from Quickbooks, pull that Napa thing and start just picking some of these parts, making sure that we can go over and correspondingly find where those got on a ticket. And then usually you start kind of seeing trends, you'll be able to figure out that way. This way we can kind of cheat a little bit where you can see what specific date range things started to go wrong, what specific vendor we have an issue going on with. And again, if you want to do spot checks, which I think spot checks are a great idea for people to do periodically anyways, if you go over to that parts report, you can actually type in their physical part numbers and look in there directly. So if you have, let's say, a BMW water pump and the part number is 80530, you can actually go in and type that part number right there and say, all right, I did buy that. Okay, perfect. It went on this ticket. However, if I see on my end of month Worldpac statement that I paid for that water pump, and then I go and I type that part number in Tekmetric, it doesn't show up anywhere. Then I'm probably looking around the parking lot. I'm trying to see which one of my technicians drives that vehicle and see if I can find a water pump on his car. And so it allows us to get into as much detail as we need to. But then the same flip side, that summary report that it gives you very beginning, just sorting by vendor is usually all that we need to kind of get to the bottom of this stuff.
Yeah, so if you guys saw, I just grabbed a part number here, this PMD1680H, pasted that here into the report, and I found the 6 or 7 times here that's ever been purchased. The RO number associated with it, the PO number at the vendor, and the invoice number, so that we can reconcile that to QuickBooks. So all of that information is here, and that took me, I mean, Hunt was talking about it. It took me about 3 seconds to type that in and have that information available at my fingertips. So so this is actually very, very powerful tool in figuring out where parts are going and taking what the description that Hunt gave, where, oh, I'm making 50%. No, you're actually making 35%. Well, why? Well, this right here is at least a very, very good starting point for you to start digging into it. And by the way, I want to remind everybody, do not forget, this is your one and only chance to ask an accountant a lot of questions, and there is no bill that's going to come in the mail. Also, don't forget, we will be uploading this to our YouTube page. So if you guys want to go back and reference any of these things, please do not hesitate to go over to YouTube, subscribe to our page, and do share that with your friends. So Hunt, we do have a couple of questions here. It says, Hunt, the best way to match that is the cost of goods sold in QuickBooks and compare it to the parts purchase report. Laura's asking that question. Is the best way to do that cost of goods sold in QuickBooks and compare that to the parts purchased report?
Yeah, and so Laura, that's going to work for almost all shops. Most shops don't carry a large amount of inventory, and if they do, it doesn't usually fluctuate that much. The only thing is, if you have a larger amount of inventory and that inventory does fluctuate, then that parts purchase report is going to be a little bit off. You might need to be looking at the parts usage report. But yeah, I mean, the parts purchase, compare that to parts cost in QuickBooks, and those should be dead on, especially if we don't have any of that inventory switching around there.
Yeah, so that's a good point. So remember that parts purchase report, that could be parts that you brought in that you may have stocked into inventory. So we may need to compile both cost of goods sold as well as assets, right? Inventory that's been added to assets, maybe in the same time period. Also, Laura had another question. I believe she asked, let's see here. She said, so do you recommend entering each and every part purchased into QuickBooks? Not just the invoice total?
I do not. I do not. You can. I have people that do that, but it's a huge undertaking there. And we got to look at what we're trying to do here, right? We're trying to get good quality information that we can make decisions off of. We don't want to get lost in the weeds, and we don't want to spend a ton of time when we maybe don't have an issue. Now, Laura, this is not going on in your shop, but if you do have a major parts inventory, parts management problem, yeah, I might start doing this, right? I might start doing this for a daily, weekly, monthly, until I can know that my process and procedures are in place and this stuff is stopped. For most people out there, if the margins are similar, we can put the end of month statement in there. We should be able to trust it, and we rely on the process and procedures to safeguard us. But yeah, it's dependent on the volume shop that you have. That's, almost a full-time job for someone if you're going to be putting every single PO into QuickBooks.
Wow, that's I've got so do you have any preference in this? I mean, obviously, back office is an accounting link is probably one of our top used integrations, and it always seems to boil down to just personal preference. A lot of people are saying, oh, well, I absolutely want to physically touch each and every invoice. I want to enter those numbers because that, it sticks in your mind, I guess. It's just like writing a note instead of someone telling it to you. Yeah. It's going to stick a little bit better. Or utilizing that automation, right? Transferring over things into the GLs. Hunt, what's your preference?
So yeah, it's about 50-50 for our shops that we use right now. I mean, we've been working with back office for 20, 25 years. I mean, I think it speaks volumes to back office that it's the only integration we've ever allowed our clients to use. Mitchell used to do this stuff. There's other ones that used to try and do that, and we forbid people from using it because it never worked. We're like, just don't even turn it on. It'll just make your life miserable. Back office works, and it works extremely well. But like you said, sometimes people just don't need it, right? They're good enough on the back end that they can do it themselves. And then also sometimes people get frustrated with it because they're saying, well, it's pushing over bad information. And sometimes, inadvertently, back office gets bad rap for that. Back office, that software is doing its job. If you put junk into it, it's going to push junk out of it. It's not going to go in there and correct your errors. It's not going to go and correct your coding. If you are doing it, or you have someone on the counter that's not putting good information in there, correct vendors, correct PO numbers, correct payment amounts, and all kinds of stuff like that, then it's only as good. The output's only as good as the inputs that it has. So yeah, I mean, Is it, something that is going to save you thousands of hours? No, it's not, but it just works. It's super clean. And if you keep up with it, it works very, very well.
Yeah, I have to go over that one with each and every new client that comes on board. I always have to use that exact term. Junk in is going to mean junk out, and I'm usually referring to data migrations and whatnot. So people say, well, what can you migrate all my information? And I always have to go into, well, it's not all your info, right? Because all means something different to everybody. But I tell people, like, this is going to expose, this is going to help you find a lot of duplicates and things like that. We'll make it easy on cleaning that data up. But it's just a computer. It's just a system that's going to take things from one to another. Our data migration process, back office and accounting link, it's just going to carry over whatever's being put into the system. So it is crucial to get your employees to understand that. Now, I was at a shop this past weekend, Hunt. I went down for the launch of a new client of mine. Just happened to be in Florida on Memorial Day weekend, so of course I jumped on that grenade. But in all seriousness, I had to kind of train them, had to retrain them on how to do things, because everybody gets really busy, and it's true. I was in a shop and I was reminded of why I kind of got out of it, because it's just mild chaos the whole time, right? For the 7 hours that I was there. But those parts vendors are dropping off invoices. They are dropping off that box of parts. The most important thing is get the box of parts out to the vendor, out to the technician to get them on there. But we've got to be able to manage that process, right? If it was a phone order, we got to put that into the orders section of Tekmetric. If you ordered it through an integration partner like WorldPack, Speed Dial, Parts Tech, NextPart, and you've got that you've got an order number, but you got a new invoice number, how long can they let that go? Can it be a day or two? Is that okay? Is it a week? Like what makes the hair stand up on the back of your neck where you're like, oh, don't wait that long to reconcile those, to get those all put in the system?
Probably want to do this as quick as possible. Usually what we advocate most people is, whether you're pushing over back office, whether you're putting in manually stuff from the day before, you're doing it the following morning. It's fresh on your mind. You remember what's going on. We won't get into, different stuff like warranty work and stuff like that. But if you have some of the weird things that you coded a specific way to be able to market when it comes over to QuickBooks, you want that stuff to be fresh on your mind. If you're trying to go back at the end of the month or the beginning of the following month and go and do a whole month at a time, it's going to be a miserable experience. You're going to forget what happened. It's going to be hard to find issues versus if you're looking at it on a daily basis.
Nice. Gotcha. And that brings up, so Mark Cunningham put in here, which is very kind words. Thank you, Mark. He said the ability to set up multiple parts matrices in Tekmetric has increased their parts margin substantially, as well as being able to shop using Parts Tech to price shop. Now, I understand where Mark's coming from, but I do have to respectfully kind of disagree in terms of Parts Tech necessarily helping his parts margin. We all mark up parts based off of whatever the cost is, right? So if the cost is within $5 or $10, really, if the customer is going to say, no, your alternator is $9 more than the guy down the street, we probably didn't do enough, good enough job building value. And I think it's an extreme rarity at this point in this day and age. But what it has done, it has increased the ability for shops to find parts that are available here and now, right? So they can look at a number of different vendors in one single system and be able to shop and make sure that those parts are available. We're going to mark it up. They're going to be competitive. We're going to mark it up based off of our cost. But it has added this complexity, Hunt. So back to your side of the business, it's added a complexity. I might build one single job and shop for a bunch of parts, and I could buy those parts from 5 different vendors now. Instead of the old days of, I had my first call, I had my second call, and I had my third call, and I had that one guy that I didn't want to buy parts from, but I did if I absolutely had to. So that being said, with this added complexity, are you seeing shop owners buying more from an array of vendors? Are you seeing any changes in the industry as this technology has become more and more readily available?
So I think at the end of the day, kind of like what you alluded to, just like our customers are not looking for necessarily the lowest price, most shop owners aren't looking for the lowest price in their vendors. They want to deal with the people that are easy to deal with, right? Because it's like, hey, you're going to get me a $10 cheaper water pump, but I know if I have to warranty it, you're going to make me jump through all these hoops. It's just an annoyance to deal with. And so I think what you end up people doing probably is just kind of pitting them against each other. Like, hey, I want to buy it from you, but he's going to give it to me for this. Can you match that? Can you beat it? Can you, somewhere get in the realm of things? Yeah, we don't want to nickel and dime here. I mean, one of the biggest things that I do see people, and like people are mentioning, like, oh, let me see if I can be able to shop around and get a better price. If you're, being able to get lower and lower prices, or you go back and you negotiate a stated amount that's lower, you got to increase this parts matrix too, right? Because we're marking all this stuff based on cost. So people are thinking, oh, you know what? I just had a $50 water pump. I can actually get this thing for $30. You leave the same markup, your customer is going to be happy because they got a lower cost, but you actually made less money because you're still marking up 50%, but you're only making $30 versus you would have been making $50 before. So keep in mind, if you're going to get a better cost on that, you might need to tweak your overall matrices or override that specific thing so you can still maintain your margin and maintain your gross profit.
Nice. That's actually very good. A very good tip. And so, Mark also said that he's actually using that to leverage it, comparing vendors, side by side. So I think that's an excellent way of finding that additional gross profit margin. We've got to make sure that our team is following that process, as well as what you just said, Hunt. Did we just apply the same parts matrix, or did we just lower the price total again? So if you're going to do the extra work, there's nothing wrong with being paid for that. That's fair for everybody. So awesome. Well, guys, keep asking the good questions here. This is exactly what we're here for. We do want those to be, they're probably questions. The only dumb question is the one that's not asked, right? So don't hesitate to ask a question. There's others here in this group that are wanting to know those also. Mark said that we'll price it from vendor 1, buy it for a little bit less from vendor 2, if he's able to see those costs. Smart. I love it. So let's see. Ryan Miles here. He said, when you get a good deal on parts after selling the work, just lower the cost and leave the cost at retail. This is how we pay for our parts manager. Nothing wrong with that at all. And that's kind of the old school way of going back and forth. Like, hey, I can do this job, but I need you to give me a little bit better price. If they've got a little meat left on the bone, you can't go wrong with that. But you definitely want to have the accurate reporting. So, Hunt, what additional tips and tricks do you have for everybody here today?
Yeah, I mean, I guess the biggest thing, as far as, kind of what we were alluding to on making sure that the sales are matching, is just overall making sure that the costs are matching in a proper period. Like, let's make sure that if we have something that we have on account and we pay it the 15th of the following month, let's make sure we either, accrue an invoice for the previous month or move that check back into the month that it was all purchased. A great example of work, we're now in, the first week of June now. If I have a Napa bill that comes next week, I need to make sure that I code that for May, because all of that stuff was purchased in May, all of that was probably sold in May, and that's what Tekmetric needs to show. And so making sure that we have that good accrual basis of accounting to make sure that all this stuff is not only matching when it was actually sold, but that Tekmetric and Quickbooks are matching up, and we can actually, rely on the two to somewhat match each other.
Nice. Matt asked, this will probably be more for me, I guess. Matt's asking, what's the best practice start to finish on a tiered sale option? So a good, better, best, without messing up his metrics. For those of you who don't know Matt, he is huge on metrics. And so good, better, best option, Matt, what I would probably do in that instance is likely use the check boxes over on the left-hand side. When you're writing up those estimates, you can check and uncheck those boxes and how they're presented, and very easily be able to show the customer what you're recommending to them. So let's say if you want to sell a customer tires and you created 3 estimates, you create 3 estimates, but you declined the first 2, but they bought the third one. Well, you didn't have a decline job. They just declined the 2 other options. You still sold them a set of 4 tires, right? That's where I mostly use good, better, best option. And so if I were you, I would use the check boxes on the left-hand side, build your good, better, and best, and you can check that box. And once you check that box down there on the very bottom row, you're going to be able to see your labor, your parts, your fees, your disposal fees, your tire taxes, all that kind of stuff, total turnkey number in the very bottom right-hand corner. And then they say, oh, well, that's a little more tire than I want to buy for this vehicle. Great. Uncheck that box, check your second box now, and all of those numbers will update just in a matter of a fraction of a second, pretty much. And you'll be able to see now option number 2 and option number 3. And so without messing up your metrics and saying that was a declined job, because it technically wasn't. You sold them a set of tires. They needed tires. You just wanted to give them a good, better, and best. That would be the best way to do it inside of Tekmetric. Hopefully that answers your question, if I'm understanding correctly. If that is something that Hunt needs to answer, Hunt, you're about to get quizzed on Tekmetric. I don't know. So hopefully that answers. That's a good question, Matt. I actually get that one ever so often. So guys, please don't hesitate. Keep asking questions. Hunt, what else do you have for us today, sir? What else can we do to make this a little, I mean, this is a big, scary thing, right? We all went into this business because we don't want to do what you do for a living. So one, I know your tip number one is probably to hire an awesome accountant at one specific firm that I may have heard of in the past. But tip number two, how can we make this a little more seamless and painless for everybody so that it's not this big, scary thing? How can we make it easier for shop owners to reconcile this at the time frames that you're recommending?
I mean, the biggest thing is, to make sure that you have a good starting point, right? To make sure that your books are set up in a fashion where you can quickly measure this stuff, right? If you don't have your sales split out to parts, labor, shop supplies, sublet, then you're gonna have to manually go in through and calculate all of this. I want my profit and loss statement to have all this stuff so I can quickly run and compare these numbers, within a matter of seconds on it. But I think the biggest thing about this is, people get super intimidated that they get into this and they're like, I don't get this. If this is the first time you're ever kind of wading into the financial side of your business, you're not going to get it, right? It's going to look weird. It's going to be overwhelming. But as you look at it, you're going to have small wins. Okay, I see that. I see where that's coming from. I see where this is posting to. Oh, I see a discrepancy. Oh, I understand why. And this stuff is going to build on it, right? And so don't get discouraged. This isn't rocket science. You're not going to be an expert day one. And, some of the stuff like we talked about with the recordings of this, some of the stuff, it might not ever come up. You might not have an issue now. Doesn't mean you're not going to have one in the fall. Doesn't mean you're not going to have one next year when you hire a new service advisor. And so just be looking at this stuff, right? And it's super easy to be like, no one likes to look at something they don't understand. And a lot of people don't like to challenge themselves or get out of their comfort zone, but we can't just stick our head in the sand. Hey, maybe you're making money, you want to stick your head in the sand, fine. But unless you're looking at this stuff, unless you're analyzing it, we don't know if we're leaving money on the table. We don't know if we got stuff walking out the back door. We just got to really stay on top of it.
Did you see the question there from Philip?
Let's see here. Back office, export my numbers, not using Tekmetric to QuickBooks. Are we allowed to answer this? Because he's not even using Tekmetric.
Oh yeah, no, I'll convert him eventually, Philip. I'll call you immediately after this. No, I'm just joking. But yes, absolutely. This is for all shop owners.
Yeah, that's a really good question here, Philip. And so here's a good question on it. So in QuickBooks, when the stuff comes over, when they have, oh wait, I just lost it again. All right, so what Philip is asking is he is exporting his bills over from Tekmetric into QuickBooks. And so he's doing, I think, the daily invoices or whatever month they occur. And so if I bring a Napa invoice over and it's dated for May 31st, that is when that cost is going to show up in QuickBooks. It does not matter, Philip, when you pay that. Whatever you're going to see on your profit and loss statement is the actual bill. Has nothing to do whether you pay this now, next year, next month. The bill is going to set that date. But yeah, that's a really awesome question there.
Nice. I see Jason's got a question for me specifically, so I'll follow up with Jason on that one. And then Ryan, one potential opportunity for helping the industry get up to speed with their numbers, especially on parts, would be for great companies like Tekmetric to continue to put on best practice videos on YouTube so we can learn and train our staff on how to do this correctly. Thank you for the ones that you have. Please make more. Ryan, thank you. That was nice. I thought that was going to be a question. I did not mean to pat my back. So in all seriousness, Ryan, that is actually the whole reason that we've been doing these. And I agree with the statement that you just said. It starts with your employees. It is so important. It is everything from, doing things like requiring a marketing source when you start up an RO. Like, how can a shop owner figure out where did those customers come from? How did I make money without knowing where they came from? And a little bit of coaching teaches them, hey, if you give me good information, I'll make good decisions, or try to make good decisions. If you give me bad information, you're guaranteed I'm going to make a bad decision. And your accounting is no different, right? So spending a little bit of time to get them to understand, to really get them to understand why that data is important and how you can make better decisions on it. So Matt says the marketing source. I didn't mean to bring that one up necessarily, but marketing source is overlooked quite often. And so things like that, to give the shop owners the good information to make good decisions, it makes them more money. It makes the employees more money, just to be clear, right? So I tell our guys all the time, this is my job, obviously, as business development director for Tekmetric, is figuring out where our customers are coming from. And if our sales team just says everyone found us on Google, well, they didn't just wake up with the name Tekmetric in their head. They attended one of our webinars, right? They were at a conference and they just found us through Google. They wanted to find our link and our website and sign up for a demo. They didn't find us because of that. They found me because of a webinar or because of a conference or something else. And so having things like that is very important. Likewise, your numbers are just as important. It is just as important to stop and take a little bit extra time and make sure that the cost is correct on that part. If it's not, then one of two or three things are going to happen. Your gross profit's incorrect. Your back office person is going to have to work on it to dig into it to find it. You're going to have to pay your accountant a little bit more to help you dig into it and find it. Hunt says that's okay. But in all seriousness, right, all it's doing is it's a trickle effect that goes down, and either bad decisions will be made or bad metrics will be put out into the system. So I do think that starts 100% right there at the beginning with your employees. So let's see, Mark's got a question. Doesn't back office allow you to make corrections and adjustments before pushing to QuickBooks? That's 100% a Hunt question.
Yeah, and so it does allow you to make corrections on it. Usually what we end up seeing is, and I'm not sure exactly why, back office probably answer this, sometimes when you go back and you make changes, it has to do with that date that you decide to post it, right? And so sometimes when you go back and you make a change to the invoice, it'll push that over again and you can re-import that, but sometimes it doesn't, right? And so that's where kind of the stuff gets thrown off. All right, I sold something for $1,000 yesterday. They came in today, and for whatever happened, we decided to discount it off. We removed some stuff. We broke some stuff. We went back, yesterday and changed the job, but we never re-exported that. That's where the stuff kind of goes a little bit wonky.
I don't know if you saw Rachel's question here. This is interesting. She said that how would you address shipping costs? The owner wants it rolled into the cost of goods sold, and she wants to see it on the expense side of the P&L in QuickBooks. I would say that's cost of goods. I mean, if I got to pay to ship a part, I want to mark up based off of my true cost of goods sold. So, Hunt, what are you seeing in the industry?
Yeah, I mean, this is one that comes up too, because a lot of people, argue about this. I mean, some people on here are like, wait, shipping costs, right? Because they're in a certain area where they never even see this stuff. But exactly like you said, PJ, like, hey, if I had to pay $50 for that part and I had to pay $30 to overnight that, I paid $80 for that. I don't care if I paid for a part. I don't care if I paid for shipping. This is how much it costs to get it the door. I'm going to build that in. I'm going to mark that whole thing up on it. And then, whatever I do in Tekmetric, it's the same thing I want to do in QuickBooks as well. So again, like I said, there's different schools of thoughts on it, but whatever you're going to do in Tekmetric, do the same thing in QuickBooks. PJ and I both agree, fully loaded cost to my door, sales tax, whatever other fees you have to pay for that is the cost of that part.
Yeah, Rachel, I would love to know, obviously we don't want to argue with you. There's probably a reason why you want to see that cost somewhere else in the P&L. So please don't hesitate. Type that out real quick in shorthand. Let us know why it is that you want to see it broken out separately. Maybe there's something that we're missing. Jason, thank you again for the kind words. Apparently Jason is both a client of mine and yours, Hunt. So says that top tier companies, elite. So that's awesome. It's very, very nice to hear.
Thanks, Jason.
Yeah, very cool. Rachel, that's interesting. So for me, I'm thinking, in terms of bottom line, I want to be able to mark up the parts. Obviously, if you paid for shipping, especially a large shipping cost like what Hunt described, you probably had a reason, right? We needed to get that vehicle out. It's the only one that's available. Absolutely anyone and everyone's going to have to pay that. So you're not charging them more. You're not charging them more than what is a fair number. So I think that's only fair to the customer. So Tammy here's got a question. We're in Pennsylvania. When we buy inspection stickers, what account would they be out into? I think there's a typo there. Cost of the parts, inventory, the customer eventually pays for the sticker. So essentially sticker inventory, we had to do the same thing in Texas. I had to pay like $7.50 per ticket or per sticker. And then we sold them for $15, but that also included the person that did the inspection. So I could see where she's coming from. What do you advise in something like that, Hunt?
Yeah, so it depends on how you're coding that stuff. If you're able to split it out specifically and you can charge it for a sticker underneath parts, then fine, put it into parts. If you're kind of looping up into a service, a lot of times the inspections end up going out as a labor sale, I believe. And so sometimes we see people actually putting that under shop supplies or some other, burying area. At the end of the day, if it's not that much money, it's probably not a material amount, but anytime we're looking at something like this, we're trying to match up the cost of where the sale is going to be. Whether it's labor, whether it's parts, it's going to be parts.
Interesting. Yeah, I actually don't even remember how we used to do it in our system, but that is essentially what it was. I paid for a part that was essentially $7.50, but the sale I think was actually $14.50. So I don't remember if we marked it as $7 profit on a part or $7 of labor sale. I'm not sure. So Chuck, oh man, Chuck's putting me out there on Front Street here. Chuck said, he asked me, is there any plan to have tire sales broken out in Tekmetric? About 20% of his sales are in tire sales. So yes, actually, Chuck, there is a plan for that. I don't want to say how soon that is, but I think that is on the near-term radar, actually. We've talked about it heavily here of recent, and I do believe that one should be coming out pretty soon, especially with the new tire enhancement upgrades that we've added. I think we're adding in DOT numbers and the integration coming over from Parts Tech through Tire Connect. I would have to see that on the near-term radar, Chuck. So I don't think you're gonna have to wait much longer for that one, buddy. So let's see, Tammy, in Pennsylvania, we can't make any money on the stickers. Oh,
so even if we're not marking it up, though, same thing.
Yeah.
Even if you're not marking it up, even if you're buying it for $15, you're selling it for $15, just make sure that we're trying to match it up where it is. So if I'm charging $15 for the inspection and I got the stickers, whether or not I'm marking it up, I want to try and make sure that those are going to the same spot.
Gotcha. Yeah, that's I guess so. In Pennsylvania, you just do inspections and hope, I guess, if there's something wrong with the vehicle, then they'll keep the car there with you and you get to fix it. So
there's a couple other ones. I don't even think Pennsylvania is the cheapest one in the country. I mean, I've seen some crazy things where it's just, yeah.
Really? That's interesting. For me, it's we had a tiny bit of profit in it. It obviously wasn't much, but of course, if it needs wipers or if it needs tires, if it, whatever, then maybe you get some work from that. So let's see. Matt's got a question here. He's wanting to run some digital infrastructure expenses into marketing. Oh, okay. So I can speak a little bit on this, Hunt, to maybe help clarify. I know Matt does a number of things like I don't want to give away all of his secrets, but things like CRM and phone tracking, connecting voice over IP into the CRM. And so, Matt, how would you recommend, I guess, running that digital infrastructure as a marketing expense? And why do you recommend or not recommend, Hunt?
Yeah, I've seen some of Matt's posts. I think it's in your user group here where he talks about, how he can track every single phone call from when the person calls, when they make their first connection, to actually allow them to do it, which is super, super cool. And I, 100% kind of agree with the aspect of probably putting that into advertising or marketing, right? And so the reason that he's doing a lot of these things is not just so that he can call and order a part, right? It all has to do with the customer experience and the customer acquisition cost. And I think that should be factored into the budget, because some of that stuff that he sounds like he's talking about there doesn't sound cheap, right? And so it shouldn't be ignored. And maybe if you're able to be a little bit cheaper on some areas of your advertising because you're so good with what you do with those leads, that whole thing should be built into the cost. And so I would agree with you being able to put that into, marketing and advertising. Again, personal preference, that what makes sense, and that's how you analyze it, then that's probably a pretty good idea.
Any benefits or tax implications? Does that help the shop owner at all to put it in those places, or is it just essentially, it's just putting it in your P&L in one spot versus another?
It's just put it in one spot versus the other, but it allows you to look at this. It allows you to understand it. There's industry norms of every single expense account. And so maybe it allows you to kind of compare yourself more apples to apples to some of these other numbers.
Gotcha. Okay, interesting. Well, everybody, you have a whopping 5 minutes left to grill Hunt. Ask for any tips, tricks. Don't hesitate to ask me as well if you have questions on Tekmetric. I'm happy to answer. And Philip White said that he's not with Tekmetric, so I'm going to help him see the light after this call. So I'm joking, Philip. Don't worry. I'll let Jason Malo call you. So no, in all seriousness, guys, please ask a couple more questions. We're happy to. We want to keep this lighthearted, but serious in terms of industry knowledge. How can we help you guys? This is something that, I got on this side of the business because I didn't want to be an accountant. Matter of fact, I actually threw away my $95 accounting book when I was in college because it just felt good once I got a B and chunked it. So So yeah, I didn't even bother with going back and selling that thing. So let's see here. Rachel says sublet invoices only come over about 2 out of 10. Any suggestions? Rachel, if I'm assuming that you are a Tekmetric user, I don't know of any reason as to why those wouldn't come over. If 2 come over, it's a computer system. So a computer is going to be logical, right? So the other 8 probably either weren't put in the same way, maybe it didn't have some required information. I don't know of any reason as to why those would not come over. First and foremost, I would look in Tekmetric, be sure and check under I'm looking at the screen right now, go to your orders tab in Tekmetric and then move over to sublet work. In the sublet work, you'll be able to see any and all sublets that were put into the system. If you see only 2, then the other 8 were never put in. So that could be something, they could just be putting it in as a labor sale, right? So if you send it out to a machine shop, they're going to machine the heads and they put it in as a labor sale. That's why it's not coming over as a sublet. So you're going to see labor that you probably only made 20% on, 10%. I don't know. I'm not sure how much you mark up your sublets. So that's really massively going to skew those numbers. So I would definitely go to your orders section and then on the far right, check out your sublet work and make sure that those sublets were put in correctly. But I don't know of any other reason why those would not come over. So let's see, Ryan.
One other thing on that sublet one, if she's using back office and you're having issues with it, back office will show an error log if it comes over or partially doesn't come over. So I'd also take a look at back office to see if some of that stuff came over, because if you're pushing over 10 invoices, 9 of them might have come over because it knows the vendor, it matches the stuff up, but you might have that one, it'll give you an error code why. A vendor overlap, matches up with a customer when it's really a vendor, vice versa. But yeah, it should come over. If 2 of them are coming over, 10 of them should come over.
Yep. Yeah, exactly.
Ryan, I know Ryan's going to finish this one with a bang here. I was waiting for someone to ask this.
So, all right. So Ryan's question is for Hunt, when WorldPack credits your parts account for repaying labor on a parts and warranty claim, how would you account for that? It credits the parts in QuickBooks, but is in Tekmetric as a labor sale. So Hunt, you get a really difficult question to finish this out here.
Yeah, we'll finish on this one. It's a really good question, and I'm going to tell you the way that we do this. I know there's a million different ways to do this, right? We can do this with payment types. We can do this with discounts. This is the way that I like to do this. So if I have a customer that comes in, I got a $500 job like Ryan's talking about, and I have to redo this warranty, and they're going to pay me that $500. What I would do is I would go down through, I'd run that job at full retail. They're going to pay me the $500. Now that customer is not going to pay me for this. And so I'm going to close that ticket out and I'm going to pay that. But in order to pay that, I'm going to use a credit card that I'm setting up. The credit card is going to be called Warranty Work. If I'm using back office, when that comes over, I can automatically make sure that that credit card is mapped to a warranty expense. If I'm not doing it through back office, I just need to manually allocate that to warranty expense versus a bank account. So everything the same as like you're getting a credit card, instead of going to a bank, it's going to an expense account, right? And so that would be the first part of your equation there, Ryan. Now what you would need to do is when you get that end of month WorldPack statement, all of that is going to go to parts cost of goods sold. What you would need to do is you would actually need to split out that $500 credit. So you would need to increase your parts cost by $500, and that $500 would then go down and offset the warranty expense account. And so we have the $500 loss that we have for not being able to charge that customer for the ticket. And then that WorldPack credit comes over, those two wash out. We didn't actually lose any money on that because WorldPack paid for it. You might have to go back and watch a recording on that one again. But
and like I said, this is getting recorded. So that's awesome, actually, Ryan. That's a very good question. And it's tricky. I mean, I used to have to do warranty parts claims through Ford all the time. They were a nightmare to reconcile. They were horrible, and I was paying 5 times as much as Tekmetric cost. And I had a software that, I mean, it was that plus accounting, plus reaching out to my Ford rep, plus calling the parts company, and plus tracking it with a pen and paper on top of it. It was just unbelievable. So those are always difficult. So Ryan said he's so glad that this is recorded. So with that, guys, I am going to have to wrap up. Shanna, I do see your question here. I actually copied and pasted it over here, and I'm going to email it over. to Hunt so that he can reach out to you and hopefully help answer that question. And so with that being said, I am 1 minute over. I do want to thank everybody for coming and joining this. Please go to our YouTube page and subscribe to it. You will see these pages or these videos pop up. You'll get an alert whenever they pop up. You can refer back to those, and please share these with your friends in the industry so that we can help rise the tide, right? The rising tide raises all ships here. So thank you all so much. Hunt, thank you so much, buddy, for joining me today. I really do appreciate it. So with that being said, guys, thank you all so much. We'll talk to you soon. See us check out our webinars, and be on the lookout for more of them coming around soon. Thanks so much.
Thanks for watching. Please do not forget to give this video a thumbs up and to share it with the rest of your team. Also, please subscribe to our YouTube channel if you would like to see more helpful videos for auto repair shops. Have a wonderful day.